Well, South Africa's new political dawn has had a positive impact on consumers' financial vulnerability levels in the first quarter of 2018. This is according to Momentum and Unisa's Consumer Financial Vulnerability Index. It shows that it improved to 52.6 points, up from the 49.3 reported in the last quarter of 2017. Head of Member Solutions at Momentum Corporate, Ronelle joins us now for more. Thank you so much, Ronelle, for your time today. How do you measure financial vulnerability?
It's actually an index that we developed with Unisa, and we measure the perception that consumers have around their financial vulnerability. So it's how they feel about their finances. Okay. And we do it on a quarterly basis. So it's an index that we measure continuously, so we can actually feel how consumers are feeling there consistently throughout the year.
So we've seen an improvement between the fourth quarter of last year and the first quarter of this year. What do you put that to specifically?
It's good news that there is an improvement. However, consumers are still heavily exposed. Okay. So it is good news that there has been an improvement. Obviously, there's a whole lot of factors that influences this perception that consumers have. We think the main one over the last quarter has been the optimism that has been created with the new dawn. Okay. So in February, Cyril Ramaphosa was elected as our new president, and a new optimism has been ignited in the country. So consumers are feeling a lot more positive about their finances because of this. Okay. However, the underlying issues why consumers are still heavily exposed has not changed much. Yeah. The two main factors why they are so heavily exposed is still financial education is lacking. That is one of the big causes, and it has been coming out as one of the indicators consistently throughout our research.
Okay, and we'll talk a little bit about financial education, because that is a very important issue. But you look at four subcomponents. So it's income, it's expenditure, it's saving, and it's debt servicing costs. So how are they feeling around income? Are we seeing any improvement there? Because we are obviously worried about unemployment. We were talking about that with Martin a little bit earlier.
Absolutely. And it actually improved across all four indexes. On the income one, it improved the most, and on the expenses one as well. And you can see that also the retail numbers has increased year on year. So you can see the spend is increasing in the retail sector. And over the last year, or over the last quarter, the inflation has also marginally decreased, which created a little bit more margin for consumers to spend a little bit more. And that's why we see in those two sub-indexes that it has improved probably substantially more than on the debt, that the repayment of debt is still, it has improved, but not as great as the income and the expense.
I suppose that interest rate cut did assist to a certain extent. What about savings? That's always one we worry about.
Yes. Savings, and that actually gives me our second point. What is the other indicator why people are so exposed? And it is actually just because people do not budget. And we see this coming out in the survey again and again. And again, this quarter it came out. So it links back to saving. If people do not plan for their finances, they cannot create margin in their budgets to save. So people are still spending more than they earn, and that is still problematic. So we live in a consumeristic society, a keeping up with the Joneses society, a reckless, careless spending, buying things that we don't always need, and that puts us in a heavily indebted situation. So savings is still heavily under pressure, and it links back to the financial education. People do not understand the power of starting to save earlier, the compound effect that you can get over a long period of time. And we have a discipline issue. It's still hard for us not to buy, and rather to save for that one day.
Now, the discipline is obviously an individual issue, but education, there's many different players in that space. So what do we do about that? What do you think we should be doing about that?
And I don't think it's nobody's not doing anything. I think a lot of players are already doing a lot. So government is working closely with private sector on a whole lot of initiatives to get financial literacy into our schools.
Yeah.
Because I think that's where the problem has to, we have to start solving the problem at a school level. We have to start building it into our curriculums to teach people what does financial planning on a personal level mean. Unfortunately, none of us were ever taught how to spend our first paycheck. You get that first paycheck and
you go mad.
And you can do whatever you want to with that money because it's your money. So I think there needs to be some form of discipline in our education system just to teach children the basics about saving, lending, what is good debt, what is bad debt. And in terms of what we as a corporate can do, financial sector has worked very hard not to just drop products with clients anymore. With our products comes a whole lot of education. So even Momentum Corporate, when we do employee benefits, we partner with our employers to get the employees financially well, because you spoke about productivity. A financially well employee is a more productive employee.
They're not worrying about being able to afford things. We'll leave it there. Thanks so much for your time today. Head of Member Solutions at Momentum Corporate, that's Ronelle Kind. After the break, we take a look at business stories making global headlines. Stay with us.